Good afternoon, everybody. Welcome to another episode of Moving Markets podcast. I am Jeffrey Dunyan, your host. Seems like every week I tell you that next week we're going to get mine and Kevin Hurley's schedules matched up, and then we have a rough time doing it. We may not have Kevin for a good portion of the summer, but we'll have him back in the fall. I'll probably be going solo for a good portion of the rest of the summer, but I'm glad to have you here. Again, my name is Jeffrey Dunyan, the owner and founder of Safe Option Strategies. And as always, this podcast is sponsored by Safe Option Strategies. If you want to learn how to trade the markets in a more safe way, if you want to learn how to trade the markets with less stress, less risk, take a look at Safe Option Strategies. Check us out at sostrades.com, sostrades.com, and learn a little bit more about what we're doing and how we're helping people survive the markets. Okay, couple of things. I've got 4 things that I want to talk about as we go through the podcast today. The first one is CPI. Tomorrow morning before the market opens, the CPI numbers are going to come out. It's a big deal every month, and it's been a big deal every month since inflation started to go up under Joe Biden. And let's just call it what it is, wherever your politics are. This is Joe Biden's inflation, no matter how much they would like to blame some things on Trump and the pandemic. Inflation was not out of control until Joe Biden came in and started making some disastrous policies for the economy. The CPI number, the consumer pricing index, gives us an idea of how things have increased or decreased at the retail level, at the grocery store, at the gas pump, when we're buying appliances, when we're buying anything, everything. What are we as the consumer paying, and how much has that gone up? The narrative has been, and this it's not inaccurate to say that over the last several months, the CPI number has been coming down. It peaked last year in July at over 9%. That means that in the month of July of 2022, we were 9% higher on the average cost of consumer products across the board than we were in July of the previous year. That's what that 9% number represents. That's where it peaked. And then every single month since then, that number has come down. It went from 9 to 8 point something, and then it went down to 7 point something. A couple months in a row, it was 7 point something, with each month getting a little bit less. The most recent read, I believe, was down to 4.7 or 4.9%. So it's come down quite a bit from that 9%. And the spin is we're bringing inflation down. The truth is the rate of inflation is coming down, but inflation prices are not coming down. The only thing that is coming down is how fast prices are increasing. Prices continue to go up. When we get that 4.9% number last month, that was April's number that was reported at the beginning of May. Tomorrow we're going to get May's CPI number reported in the first week of June. So when we get the May number last month, I think it was, I said 4.9, it might have been 4.7. When we get that 4.7 number, remember, that's 4.7% price increases from April of 1 year ago. Last year, April was over 7% higher from the April before that. That means that over the course of 2 years, we are up 11, almost 12% from 2 years ago. Inflation is not going down. The amount it's going up has slowed, and there is a big, huge difference. The administration would like to spin that everything is peachy and everything is hunky because prices are coming down. No, they're just not going up as fast as they were. Tomorrow morning, I've been surprised the last 2 or 3 months in a row with lower CPI numbers than I was expecting. Tomorrow's expectation, if you'll give me just a moment, I should have had it right in front of me here, but give me just a moment, I'll tell you. Tomorrow's expectation, I believe, is for a number around 4.1%. That's the consensus expectation. Last month it was 4.9. I was right when I was saying 4.9, not when I was saying 4.7. So they're expecting it to come down another 0.8% from 4.9 to 4.1. But don't buy into this BS math. that inflation is down 8%, or that prices are coming down 0.8%. Prices are not coming down 0.8%. The rate of increases in prices has lessened by 0.8%. If they come in with that number. Like I said, I've been surprised the last 2, 3, maybe 4 months in a row with a lower number than what I was expecting. That 4.1% number that is the expectation for tomorrow, that's a pretty aggressive number. I'm going to be a little bit surprised if we're any better than 4.4 or 4.5%. So in other words, I think the rate of increase will come down a little bit tomorrow, but I don't think it's going to come down as far as what the analysts are expecting. I've been wrong a few months in a row. I might be wrong again. We'll talk about it next week if I am. So we've got that report tomorrow. Definitely a major miss on that number, or a major beat on that number. A major beat would be a much lower number than expected. A major miss would be a much higher number than expected. Either one of those could rock the market a little bit, even though that number that comes in tomorrow is probably not going to have any effect on the second thing I want to talk about, which is the Fed rate meeting that's going on tomorrow and Wednesday. And Wednesday around 2 o'clock Eastern time, the Fed will let us know if they're going to increase interest rates, increase the prime rate again. The Fed future funds rate, which is a measurement of what people believe the Fed is going to do. Remember, this is not scientific, other than that it may be a scientifically administered survey or poll. It's not scientific in the sense that this number is just based on people's opinion. This is just what people are trying to guess the Fed is going to do. Right now, there's over a 75% expectation or guess that the Fed is going to stop or pause rate increases. I believe they have increased interest rates now 11 or 12 months in a row. Now it's actually more than that. It's 11 or 12 Fed meetings in a row, and they don't meet every single month. They meet, I think, 9 times a year. So they have been raising rates aggressively. This would be the first pause they've taken in quite some time. That is the expectation. Over 75% of people surveyed think that they're going to pause on Wednesday. I'm in the minority, folks. I think they're going to raise rates. I think Jerome Powell is terrified of a repeat of what Paul Volcker did back in the 70s. And just as a quick history lesson, when inflation started getting bad in the mid 70s, kind of early on in Jimmy Carter's administration, inflation rates begin to go up. And Paul Volcker, who was the Fed chair at the time, began to raise the prime rate in an effort to keep inflation numbers in check. Inflation, as most of you know, is simply an increase in prices due to more money chasing fewer goods. When people have more money in their pocket and there are less goods to be had, the price of those goods go up, and it puts pressure on the average consumer. So in an attempt to lessen that pressure, an increase in the prime rate means that there's not as much money in people's pockets. They're not chasing that fewer number of goods. The demand is not higher than what is provided out there, and prices can either regulate and flatten or come back down. So Paul Volcker started raising rates, but then there was fear of going into a recession. There was fear that he was being too aggressive, and Volcker stopped and he paused. And the problem when he paused is that inflation sort of reared its head up again, and it got much, much worse. And he repeated this cycle more than one time. He paused again when he felt like he was being too aggressive, or maybe was pressured because he was being too aggressive. And then, unfortunately, things started to go up faster than he had them coming down because of his rate increases. So I believe that Jerome Powell is scared to death of having a repeat of that situation. A lot of people believe that because of Volcker getting too soft too fast, we had a much longer inflationary period during the 70s than what we needed to. There's people that think that Ronald Reagan would have never been president if Volcker would have stayed the course, maybe pushed us a little bit faster and a little deeper into a recession, but one that we may have rebounded out of much faster and in time to save Jimmy Carter's presidency and to possibly get him reelected. Now, from my perspective, thank heavens that didn't happen, because we this country badly needed Ronald Reagan from my perspective. But this is what I believe. I believe Jerome Powell is very afraid of a repeat of what Paul Volcker did. And that's why I'm at least a little bit on the side of not having having another rate hike on Wednesday instead of a pause. Now, a couple other things Jerome Powell's got to be cognizant of as he tries to thread this needle. If the decision is to not raise rates, he needs to be a little more definitive than just letting everybody guess on whether he will increase rates when they meet again in July. After the July meeting, there's more than a full month where they don't meet. I think after July, the next meeting is not until September. And there's going to be a lot of people speculating and a lot of people wondering what's going to go on. It's not going to be a good thing for the markets. It's not going to be a good thing for the economy if he pauses and then tries to stay overly ambiguous about what's going to happen in July. I think he needs to use the word "we're going to skip this month" or "we're going to skip this meeting" in terms of a rate hike increase, rather than say "we're on pause until further notice." I think if he says "we're on pause until further notice" or intimates that, then I believe the markets are going to overreact and overinterpret that, and possibly we're going to get a little too much of a rally that will then cause things to go, much in the other direction, and a big crash that will hurt a lot of people. So that's one of the dangers. If he does raise rates, which is, again, I know I'm in the minority on this. Less than 25% of the people feel the way I do. If he does raise rates again on Wednesday, he's in order to not have the markets absolutely crash, he's going to have to say that it is likely that this will be the last needed rate increase for a while, maybe forever. He's not going to say forever, but for quite some time. And that's a tricky thing to say. He's got to be pretty committed to that if he's going to be that definitive. So Jerome Powell's got his work cut out for him. It's not going to be an easy thing. Whatever he decides to do, rate increase or no rate increase, we're going to have to pay real attention to the commentary that he makes following that, and try and get a feel for where things will go from here. My guess is that he's going to raise rates again, that he is going to be maybe not definitive, but strongly intimate a pause in the next cycle. And I think the markets could survive that. I don't think there will be a massive sell-off. I think you could see a little bit of a pullback from these 6-9 month highs that we've had recently in the three major indexes, but I don't think it'll be a bloodbath. I don't think it'll be a crazy ridiculous move. Now, with all of that going on this week, let's talk a little farther out than this week and this month and maybe even next month. Based on what Jerome Powell has done up until this point in time, and based on the continued idiocy of the economic policies put forth by the Biden administration, and no sign at all that they're going to make any changes to what they're doing. And I'm talking about the war on fossil fuels. I'm talking about the out of control government spending. I'm talking about the overregulation of too many things in too many industries to even keep track of, without any sign or any reason to believe that the Biden administration is going to reverse any of that. Folks, I think we're heading into a recession. I'm also probably not in the minority, but this is pretty evenly split between those talking heads that think we're going into a recession and those who think that we're not, or those who think it's going to be a super soft recession and a very short-lived recession. I'm more in the camp of it's going to be painful for a year or more. I think it's coming, and I think now as much as ever, you need to consider having your portfolio positioned in some stocks that are more recession-proof. A couple of retailers that I like are Walmart and Costco. These are companies that are going to survive a recession. These are places where people are going to continue to spend money when money gets tight. I would not be in any travel stocks going in maybe short term in some option plays. CCL got an upgrade today. That's Carnival Cruise Lines. They got a nice upgrade. Royal Caribbean is doing well right now. There's a lot of business coming back into the cruise industry, the hotel industry, the airline industry. I think for short-term plays, those companies are good, but for longer-term holdings, those are not the kind of companies I would be in right now. I would be a little bit careful about hospitality and travel and leisure. Energy stocks like Chevron, ExxonMobil, I think those are good places to park some money for a period of time. Other utilities, but I really like Costco and Walmart right now. Be considering at the very minimum getting into some more recession-proof companies and being positioned there a little bit. All right, one last thing that we need to talk about. This is more political than market driving. However, I'm going to talk about it because it does have the possibility of affecting the markets. I'm not going to go through the details of the federal indictment against Donald Trump that came at the end of last week. No coincidence that it came right when the House Select Oversight Committee was able to look at some pretty damning evidence that Joe Biden has been helping influence and craft U.S. policy specifically for money, that he has been bribed and that he has been compromised. There's, in my opinion, way more evidence of that happening than there is of Donald Trump committing an actual crime. Now, I'm not debating the things that are in the indictment, whether or not Donald Trump may have done some of those things. I'm debating whether or not what he did was criminal and whether this should be handled in a civil manner. And I think there's no doubt, regardless of which side of the political aisle you're on, if you think that this is not political targeting, that this is not using the Department of Justice as a political tool against your political enemy, you're absolutely nuts. I would detest this if it were a Republican administration doing this against a Democrat with a lot more at stake and a lot more on the line than some documents that he had every right to declassify that got moved to his private residence. Him doing that as president, in my opinion, is not nearly as severe as Joe Biden doing that as a member of the Senate, when it is flatly illegal and when Joe Biden has no authority of any kind to declassify anything. And yet that's when he was taking classified material. And there is some evidence that some of the classified material that Joe Biden took related directly to Burisma and Ukraine, which are the country and the company that there's some pretty good evidence bribed him specifically to make changes and alter U.S. policy. Look, there's a double standard. There's absolutely a double standard and an uneven application of the law. And again, I don't care where your politics are. You may hate Trump. You may hate Republicans. You may hate conservatism. You may hate capitalism. You may stand for everything on the opposite side of the political spectrum than what I do. However, if you don't believe that this is political targeting, then there's, I'm sorry, your head is buried in the sand. This is absolute political targeting, and it's a sad day for the country. It frightens me that the administration sitting in power could do this to a political enemy with so little that could be even discussed as possible criminality. The idea that espionage was committed is ludicrous and stupid. It's just that I'm going to leave it right there. I bring this up for this reason. Anything and everything that goes on with Donald Trump over the next 3 to 6 months is going to have very little impact on the stock market. I think most traders have tuned out this noise and don't care. I'm not saying they don't care and they're not passionate about which side of this debate they're on. I'm saying they don't care about it as it relates to trading. And I would even to some degree put myself in that category. I don't think what's going on here is going to have a big impact or a big effect on the markets. Good or bad for Trump, good or bad for Biden, I don't think it's going to have an effect. What could have a dramatic effect on the markets, and something you need to be watching for and keeping an eye out for and maybe stay a little bit hedged for, is if something actually happens to Joe Biden. If there became some irrefutable evidence, no more he said, she said, no more finger pointing, but some actual irrefutable evidence that Joe Biden had accepted bribes, if there was a money trail uncovered, if it could be proved beyond any doubt that he accepted money in exchange for political decision making, that is the type of thing that can sink a presidency. That is the type of thing that can rock a country, and that could have a major impact on the markets. Do I think that's going to happen in the next 6 months to a year? No, unfortunately, I don't. And I say unfortunately because everything that I have heard and seen leads me to believe that Joe Biden and his family are incredibly corrupt, and that he has been in Washington, D.C. for almost 50 years, taking every advantage of every penny he could extort out of anyone else, and that he has traded political favors for that. That is my opinion. That is my opinion based on what I've seen put forth so far. I could end up being completely wrong on that, and if I am, I'll eat crow on that, and I'll say, I'm sorry, Mr. Biden and your family, I was wrong. But based on what I've seen and what I've heard so far, that is my opinion. Do I think anything's going to happen as a result of it? Sadly, I do not. Still, I'm going to stay a little bit hedged in my positions and be prepared for that possibility. So again, next week, there is a possibility that I'll have Kevin back with me. I hope I do. I think for the rest of the summer, we're going to consider Kevin more of a guest than a co-host. But if that changes and things kind of come correct on his schedule such that he can join me on a regular basis, we'll go back to calling him a co-host of the program. In the meantime, on one last personal note, last year at this time, we were not doing the podcast. We were taking a pause from it for a little while. So a lot of our loyal podcast followers were unaware of this, but it was a year ago today that my father passed away. I love you, Dad. I wanted to take this opportunity. I absolutely believe in a life after this. And my dad, from the day I started Safe Option Strategies through the time I did this podcast on a regular basis a couple of years ago, my dad was hands down by far and away my biggest supporter, my biggest fan. My family, my wife, my kids have been great supporters, but my dad was a fan. And never had anything but encouraging words for me, never had anything but positive things to say, even when sometimes he didn't agree with me. He was always there as my biggest fan. I love you, Dad, wherever you're at right now. I know without a doubt you are still my biggest fan, and that means the world to me. I'm going to wrap it up right there, everybody. That concludes another episode of Moving Markets Podcast. Hope to have you all back next week. And once again, this episode of Moving Markets is sponsored by Safe Option Strategies. Check us out at sostrades.com, and we'll be back next week to share more with you about what went on and what's coming up after that. Thanks, everyone. Bye-bye.